are doing pre-London Open analysis. So today we have CPI for USD. I've received an email from FTMO. I think everyone did who has ever bought a challenge or whatever. But they are saying basically be careful. Today's CPI for USD. And from past events, CPI has been very volatile event affecting the market. Spreads are higher. Just make sure that you are, adapting your risk correctly, but also be careful very much with trading it because the slippage is going to be very high. I know somebody from about 2 months ago when I was still trying True Forex funds, someone with True Forex funds with 10k account put the 0.5% trade on with profits. They had already profits in the account, and CPI event wiped it all. So the slippage is extremely high, especially on those accounts as well that are prone to slippages. So just please be careful. So let's see how markets are going to evolve. So I've actually just cleared my charts, and I don't know whether I've made a mistake or not, but I've made a copy. So I've made a copy. So I've got my, not very clean charts over here. So let's just take a look at a few things. So from weekly perspective, I just want to highlight that, we continuously took the lows out. Here was where our swing high was taken out on a weekly, and that had given us the low and the high and the discount area that we want to work with, and we would want for the markets to correct themselves eventually. Over here, when we have that break of structure, we did get mitigation overall, so it just touched the equilibrium, but this was the first point of interest, and as we have refined everything, price is now sitting at the very extreme of that point of interest, with the refinements of 4H, etc. So we are observing what the price is doing right here. Oops. Now let's take a look at daily. So in terms of daily, actually our change of sentiment came earlier, because over here we had price breaking the structure, and when we took these highs out, this is where our change of sentiment came. It's similar from this low to this high. This is our weekly range, and then if we are going to look at the last unmitigated leg from here to here, we have an overlap of the same area. Is the same on 4H, so it's all the same. That round here we have an area that we would be looking for the price to eventually come back to, and it's a strong area to buy from. So eventually when a price does do that, this is going to be our main area of interest. So I'm going to delete this, and now let's go into 4H. So on 4H, we always want to find the last high that was driving the price to the downside. So when we are looking at this price action here, we can see that these lows, I'm really sorry about the dogs, this is where the lows were taken out. We had very shallow pullback, and then price continued to move in a downwards direction. Eventually we had a sentiment change with price taking the highs out. Now what we can see is that when over here we started taking the highs out, we could leave it here. Depends on this. To be fair, to me that's not a pullback. The pullback happened here actually. So this is where we still know that this is our overlap of the discount on weekly, daily, and on 4H as well. So this is becoming obviously our strongest area in the market that we would be looking for the price to eventually return to. So this is our strong demand that is very much unmitigated, and this is what we would be looking at when the price returns there and corrects itself. Hold on a second. Now let's also take a look at what is happening further. So now what we have is price breaking the structure to the upside. And now remember, this is something that I want to highlight, and I'm going to share a little video from yesterday's session where I'm highlighting that quite clearly. But on 4H, we do have pretty much swing structure and then internal structure. So we have, obviously, those are our swings, swing, 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 okay? But inside of each swing's leg, there will be internal structure that we also will be looking at, and that is going to help us to establish, you know, what is going on. This is the reason for our dotted lines, and that is going to help us establish that whereabouts after a break of the main swing high, whereabouts the price is going to come back to into substructural level, what is unmitigated, etc., etc. And it just helps us to follow the trend of what is going on in the markets, basically. Where it comes to 15 minutes, we have 3 levels. We have swing high, we have internal and substructural level as well. So it gets very internal, it gets very nitty-gritty, because obviously it's a lower time frame, so we have to pay attention to all of those things. However, let's just go ahead with this. So here, looking at it from the perspective of 4H and even 15 minutes, because I know for a fact that here there is a 15 minutes leg internally sitting there, and from this point there, price did not mitigate back into the discounted area. This is the area here, this demand that we actually did not expect for it to have a strong reaction or to work. If you looking at it internally from 15 minutes 2 legs, then this would be one of the extreme areas, etc., etc. But looking at it from you know, what we were anticipating, this is not something we anticipated. And even from 15 minutes perspective, there were areas here that were unmitigated, and you know, the expectation was for the price to come in deeper, which it never did. So it was not something that was kind of as per our plan. So what we can see is that eventually the price took the swing high out. So we had a break of structure to the upside. Okay. So now what we can measure, of course, is this low and this high. The reason is this high because, of course, afterwards we had a pullback, and that pullback was about 100 pips. There we go. So this is the pullback. So what we have here is obviously the low and the high, and then we have a pullback, and then price continuing moving in an upwards direction. So now the anticipation is for the price to continue to move to the upside and take this high out. Of course, it is inefficient from the perspective of swings, but then when we'll start looking at things from internal perspective, you can see that this leg, which on there we go, this is one leg, which substructurally it took out the last high that was driving the price to the downside. So substructurally we had a break to the upside. This high was an important high because it was taking its own lows out to the downside and kind of giving us a little bit of change of character, because here we had a pullback, price moving up, and then eventually we took this low out, and then we were anticipating for the price to come back and continue to move to the downside. So the anticipation was for the price to move down, come back, and then start moving into this discount to then start moving to the upside. But obviously that never happened. So then we had a break, internal break in the markets, and then eventually the price came back to the very extreme after grabbing all of the liquidity and giving us a further internal break of structure. So then also here we have internal break of structure to the upside. So substructurally, yes, we took out the swing, but also substructurally we took out this out. So then we also have from this low to this high here, we have a price action. Now, one thing is, I know for a fact that the candles adapted since last week, because when this was moving down and coming back, it tapped into the discount. I know it because I remember it because it was part of my analysis. I said the price has now tapped into a discount of the 4H leg, which was this internal leg here, there. it tapped into the 4H leg, and this is the reason why I am taking that trade, unless I took this into consideration. Maybe, but the tap is still not clear, whereas there it was very, very clear of what what was going on, basically. So the price here, we had a comeback, and then over here, from 15 minutes perspective, we would also have a flip, because obviously it was a supply that took out the lows, but then that supply did not sustain the move to the downside, and then we had a flip. So the price then broke its own internal structures again. So let's have that. With a body break to the upside, and then it came back to the extreme, which is the wick area. Came back to the extreme, and now the anticipation is for the price to continuously move to the upside from 4H perspective, although we can see that the momentum has slowed down. So as the momentum has slowed down, there are a few things to take into consideration. We are back into a supply inside of the premium on weekly, daily, 4H 15 minutes. This is a very prominent area. So either we have this slowdown of the momentum because we will eventually correct, or the price is going to create liquidity to take it out and actually trap sellers. There could be two ways of doing it, and we do have space to move to the downside. Whether the price will want to do that, well, we don't know. We can only anticipate, and this is where knowledge of the 15 minutes is going to help us greatly, because as we can see, what we would consider this to be is just a consolidation in old terms, but we can see that the price is moving up. Now, one thing that we can also see is that, of course, somewhere around here we have a demand at the extreme, so we can see, of course, that other things have been mitigated if we're looking at it from the perspective as well of the low, the high. We have an overlap here as well of the discount and this area and the last 4H leg. So we have an area that we could be interested in. Of course, we would break it down on 15 minutes as well, but then what we can also see is that the price is taking its own, so apologies, this would be a swing break there eventually, because it's the highest point in the market, but over here we can see that price continuously is taking its own highs out, and obviously this high was responsible for taking its own low out. So we have a little bit of a change of character here, and then price is just continuing internally to break, which also is going to be a lot more clearer on 15 minutes as well. So actually, if we do leave that on, it'll be fine. So then let's go to 15 minutes, and from the 15 minutes perspective, let's have a look at a few things. So obviously we always want to back up on 15 minutes and kind of understand what is going on. So one thing that I can see is we have different swings. I remember this was our swing low. The price then moved to the upside. Then we had here price coming back into a demand. We were anticipating for the price to continue to move to the upside, but instead the swing low was taken out. After that, the swing low, again, the price showed us the change of sentiment, and that actually the lows are strong, the highs are weak. So then from 15 minutes perspective, so this is 4H, from 15 minutes perspective, what on perhaps 4H is a substructural level, on 15 minutes is going to be a swing level. So then we have, our swing low, our swing high. If we're looking at it from the perspective again of low and the high, then obviously we have our areas down here, but we always want to break things down on lower time frame. So over here on lower time frame, I mean substructurally as well. So what we have here as well is that obviously we can see that this 4H point of interest, all of it, we can reduce it down to this 15 minutes. Perhaps we will have an area here as well. We can also see that substructurally we broke the last high, substructurally up. We broke the last high, that high took out the lows, and it was moving in a fairly efficient order flow because it regained its efficiency. So here is where we got that sign that the change of sentiment from sellers being in charge to buyers being in charge is in place. We can also see here that we have lack of that mitigation, and this is also one of the reasons why we took into consideration the wick, because on lower time frames it could be just 1 minute flip. Then the price continued breaking its highs, and we had re-established order flow, but he also left a lot of liquidity behind. It was liquidity trend line, so price eventually came back into the flip. So here on 1 minute, this was a supply became a demand, and this is where the price precisely came back into to pick up more orders. And then moved to the upside. So price kind of regained its efficiency, grabbed all of its orders, etc., etc. Then the price continued breaking substructurally, structure to the upside, and then we had price, creating the low, creating the high, never came back into a discount, but then eventually price did return. We did have again quite efficient order flow. I think we tapped here into the weekly point of interest. I know this is the extreme, but I think here was one of the areas too. We had a pretty strong drop. Price came back, picked up more orders precisely from here. I would have thought it'd be there, but maybe on 1 minute there was a reason for it. And then we just continued taking those highs out. So as we can see, the sentiment is up. So then we created the low, we created the high. What did we do after? Then we had our low, and the break happened somewhere around here. We had a small pullback, price breaking up to the upside. It's inefficient. We're not interested in buys anymore. Price then dropped, reacted to those areas, eventually came back and swept those highs. Perhaps it tapped into a refined point of interest. I don't really remember at this point, but then eventually we returned here. We gave reactions to one of our first zones, which we did have marked up, and then eventually price came back to the extreme, I would say, to this wick, because first it was this whole point of interest that the price was reacting to at first here, then here, and then eventually we came back to the extreme, and then we started moving the price up. So it is very clear that this was the swing low, and those are not those, but this is a swing high. Swing high, that is a weak high that eventually we are targeting for it to go, and this is the swing low that is holding the price to the upside. And obviously internally we are paying attention to understand what is going on. Now another thing that we know that happened is obviously here we had a break of structure to the downside. So there we had price breaking internally that structure to the downside, telling us that after the tap price is ready to move down. It left some orders open, and obviously it was a significant low because this low took out this high. So and it regained its efficiency. Therefore we were anticipating for the price to continue, but because it tapped into a supply, then it changed its sentiment. And we had two areas. One of the areas was this one here. So this was our supply. We got some reaction from it, but price actually wanted to come back to the extremes. So here we have our extreme of the supply, and this is where the price returned to. And after that return, the price started to move down. So now let's take a look at those things. So here we had a break, here we had a break. All right, so after this break, what did the price do? We had the low, we had the high. We had the first area in our discount, and price picked up more orders. Not straight away, it created a lot of liquidity in between. So we have a liquidity acquisition, and then price moved to the upside. Then what did the price do? Well, we had the low, and I would say this is the high, because then we started to see a pullback. So let's see, what is that pullback in terms of pips? Yeah, I mean, we can consider it a pullback, but you can break it down into two ways. That's what I usually do. I consider the whole leg, and then I consider the leg that actually broke the internal structure. So I've got two perspectives. So then from that perspective, always you will see an overlap, and it's clear that here, well, we have first point of interest, which would be this one here. but it was taken out immediately. And then we have our extreme, and the extreme unmitigated and with some imbalance was sitting down here, and this is what the price tapped into. We had a slight gap here, imbalance, and this was acting as inducement. So this is what the price came back to. So what you can see is that the price is building the order flow to the upside. So from the perspective of internal structure and swing structure, we are anticipating for the highs to go. Okay, this is where we are looking. So even though it's messy, and you know there is a lot of going on, we need to always consider that. So this is now mitigated, we don't need that. This is mitigated, we don't need that. This is mitigated. Now let's see, do we have anything at the extremes? Well, actually we could say we do, but if you look at like the very substructural level and what the price did, it mitigated everything on the way up. So from the 1 minute perspective, actually I think the only unmitigated area here would be this. There we are. The rest is fairly mitigated, and this is the only unmitigated area. So we mitigated the leg, we mitigated point of interest, but we may still have this area here, which makes absolute sense, because if you look at it now, all of this is just liquidity to me. We've got equal lows. It's just plenty of liquidity sitting here. You can see that it's a clear level, and you know there are so many stop losses sitting below that level. That's 100% what has happened. So all of this now to me would be considered just inducement, and all of this here I would just leave that on. This is where we have perhaps some orders still open. We may see a reaction because what you see here is the swing low, then price came back. So on this swing leg, this is the lowest point that's unmitigated. The rest is mitigated, okay? So this is what we would be looking at. But what we can also see that eventually when we came back here, we reacted, but we did not take out internally the high that was driving the price to the downside. And what we can see over here, we had change of character up, change of character down, price mitigated ever so slightly, started moving down internally, came back to premium, started moving down, came back to premium, did not really move down, came back. Now we took out some internal structure, but we did not take out the lowest point. We were always interested in the highest and lowest point in the market. So as we zoomed in yesterday on 1 minute, we could see that this is still holding. Okay, then we could also see what was the last high driving the price to the upside. It's this one. You could also consider this because we took some internal structures out. So you know, whichever you have put on your charts, that's absolutely fine. You know, it's a slight discrepancy. It's the same idea in terms of how we are looking at things now. Perhaps what we'll have to do, we'll have to adapt this and say substructural SBOSS, substructural boss. So this is substructural level. So we have internal and we have the swing. So here again, we have price, you know, coming back to the, to be fair, here, when yesterday we were reacting, it was a wick. So if you can see, I'm going to show you, over here on 1 minute, there was an area why we were reacting over here, if you remember. But then I got into sales myself too, and then I was swept, and I left multiple sell limit orders for continuations, and I just got punished for that. But then I looked at the charts and I was like, oh yeah, you created inducement above, sorry, just below this wick area, and it made sense because on 1 minute, I'm going to show you on 1 minute, I show you what happened. On 1 minute, 1 minute, 1 minute, we had break of structure to the downside. Yes. And then what we had was high and low. So at first, this is what the price, I was anticipating this or this. Okay. So let's look at 15 minutes. So when price tapped into my refined zone, this is why I sold again. And then I was able to take back all of the losses and make profit on top of it. So that is the reason, and it made absolute sense why the price wanted to do that. Seeing this as a change of character here, okay, and then price sweeping it and then moving down, I was pretty happy with that. I was like, okay, the sweep is done, but actually the price wanted to come back into that refined area, and because I had it refined and I had it on my charts, this is when I was taken out again and all of my orders were taken out. I was like, yeah, I'm selling again. It makes absolute sense, and this is the reason why I did. So now this doesn't really become that important to me, because to me this area now is mitigated. So what we did, we had substructural price action taking this out, okay, and then what do we have? Well, we have our first point of interest, so we can see some reaction, but we took it out, and then we have our extreme again, wicks are where the orders are, or rather orders are where the wicks are. And then now over here we had efficient order flow to the downside. We tapped back into the premium, broke the structure again, and now substructurally, so this little guy, we took out the last driver, okay. So we did not mitigate the point of interest, so we may see a reaction, and we will establish on 1 minute in a second, but also what we can see is now that we are potentially slowly changing the sentiment again. Well, we're not really changing the sentiment, we keep on building on those buys. So let's just zoom out. You know, we do have, if we look at it, price keep on climbing to the upside. Now we are struggling to take this high out. Obviously we are creating a lot of liquidity in between, but obviously if we understand what is going on substructurally, internally, on every single level, then it is giving us less chances of being caught out on things. So here, as we broke this to the upside, we can see that we mitigated. Again, we mitigated ever so slightly this wick, which was in a discount. It was kind of perfect. But now I see it as equal lows. Wonder if it's also Asia's session low. So then more of a reason why I would want it to sweep. And then I would prefer for the price to come back into the extreme. Okay, so obviously we're going to establish where the liquidity zones are now as well. So this is the area. That's fine. I can just keep it as that because now I know what's going on. Substructurally, we did take more highs out. We are reacting to a supply. Okay, so you know, it could be that the price will just pick up more orders from this last leg. I would take the whole lot into consideration, and that price will just pick up more orders from either 15 or 1 minute at discount and just continue to move up. It may happen, but because of this liquidity down here, etc., I would feel more comfortable for the price. And there we go. It is Asia's lows, which is fantastic, because now I would want it to be swept. But remember, it doesn't have to be swept. It's just our anticipation from how we understand the markets moving. So Asia's high. Okay, perfect. Now let's add more depth into our analysis. And what do we have? Obviously yesterday's high, and I think because we are before news, the markets may not be leaving the range of yesterday's high and low, or maybe sweeping it, or maybe staying within that range. So it's important for us to know where it is sitting. And obviously over here we have daily open. Beautiful. All right, so I like, oh, so this is at daily open, so this could work as well. Well, that'd be interesting. Now let's move to 1 minute and see what are we reacting to. We're just reacting to 15 minutes purely. 1 minute is a large leg because the break did not finish till here. So we have this as our first point of interest. We do have, I would consider this small liquidity trend line. So then I would be also waiting for the extreme. But we have those two areas. Okay, so that's fine. Let's look at 1 minute here. And then 1 minute here. Let's see where the change of character happens. And we have change of character to the upside. And then we had price mitigating. Okay, and then we have price taking further highs out, not mitigating. So we have this 1 minute area and we have this extreme here. So, you know, you can make things easy for yourself sometime, and instead of having two breakdown zones, what you could do, so let's move it like that, you could just take the whole discount here into consideration and stretch it out like that. So anytime price is in that zone, you can get yourself into buys, or you can break it down. It's entirely up to you. And then here, this is our refinement. Beautiful, nice. And also here, it's our refinement, which we have not tapped into yet. And this is our, but overall, so let's just not forget, you know, we did get a change of character up and change of character down here, here. Change of character down, and also we got sweep of liquidity. Okay, so liquidity has been swept and tap into the extreme, essentially. Okay, so now our swing high, so here I'm going to delete this, our swing high is up here. This is our last point in the market. Could we have, it's 50%, so no. All of this is a supply zone of weekly, all of this. Okay, so you can stretch it out, you can leave it here, it's entirely up to you. I will leave it here so it's not like in my face. These I can delete because the analysis is done. We understand the conclusion, how we got where we got into. So here I would say that we have, all right, hold on. Potential orders open. Okay. And then also here, we discussed it, you know, we know where we're going with this, but we need to look at this market from both perspectives. We only have here a range of 68 pips that we are looking at. So that is what we have to take into consideration. Okay, so this is our analysis for Euro USD. Any questions, anything to add? Are we clear? I wanted to do it from fresh because I did not want to just go through this and say, oh, you remember this, you remember this, you remember when this happened, remember when this happened. Obviously, we've got more detail here, you know, that we are considering this now as liquidity. We had failed reactions, blah, 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 blah. That we had price tapping into imbalance, that this is our 4H swing low, and all of this, you can add that, you already potentially have that. But I just wanted to show you how we draw the conclusion, especially on 15 minutes, and how we can see the buildup of buyers, and that buyers are in charge. But obviously this range is getting smaller and smaller and smaller, so we just have to take that into consideration. Any questions, anything to add? Otherwise, I'm going to quickly look at GBP USD. And how super clean from yesterday. Okay, that was old. So let's look at it. I need to get into a habit of hiding my drawings. See you later, shall we? So here on weekly, we are back into break of structure. So this is mitigated. So we are back into this flip. So this is a flip, and then it broke the the structure down, but overall we may see stronger reactions up here. Okay, supply reactions, but not we're not anticipating for the price to hold because everything is actually mitigated. However, here we can see that this daily is not mitigated, so perhaps price is going to show us you know, here we can see mitigation, but this hasn't mitigated. So overall we're anticipating for the price to take out those highs. That's the anticipation. The price is clearly moving up, and actually in terms of 4H, it's in an efficient order flow. Sorry, that was daily. And then in terms of 4H, it's also efficient. So here we had lack of efficiency, but then price regained its efficiency and it's now efficiently moving to the upside. So we are anticipating eventually for this swing high to be taken out. This swing low is now here. Okay, so this is how we are looking at those markets from 15 minutes perspective. Just want to make it clear. All right, so we were moving the price down. This is from our back test. Price then here came back. Then here was the price that was driven to the downside, but then eventually we took it out. So substructural level out. Then okay, so we can also see that price was driven to the upside. Then can delete this, can delete this. Okay. All right. Now what we can see is that after we broke the structure from this to this, we came back precisely to discount. Nice. So we had break of structure here, then price started pulling back, but obviously it was not efficient. Although internally, so we are talking about swings here. Well, no, we're talking internally here, but we're talking now about substructure, and what we can see is that the price was keep on mitigating back. So that wasn't a break, sorry. Then it was a break here, and then he started, you know, mitigating back, but then he came back to the discount of the leg that broke the structure to the upside. Then we had further break up. Actually, it was this high that was broken. And then now we are still holding it. So same scenario as on EURUSD, we are still holding it. What was the last high driving the price? Potentially here as well. So we're taking into consideration this low, this high. We came back into the discount. And again, same scenario. So we are looking for the price to take the swing high out. And we can see that ever since the price is taking those highs out consistently. Obviously, we will be watching how the price is going to react here. Reactions are strong on GU, doesn't mean it's going to hold, but we can see that we are moving efficiently to the upside because even when we broke this little high, or even if you take this into consideration, we moved back, and then now we're moving again. So we have efficient order flow. All right. Okay, here we came back to the wick, not deep. So it's a not deep comeback. So we may have on 1 minute some orders left there, and that's fine. That's fine. Okay, this is the swing high. This is internal swing. Okay, we still have space to come up here. Yeah, I'm looking at it and thinking the price want to come up. Obviously, when you look at it from zoomed out perspective, all liquidity trend line now. So if it starts dropping, you know, it may drop big. Here we have, I believe this is higher time frame, 4H potentially, and then eventually price never came back. So all of this, to me, this would be inducement, and this is a valid area. Do we have an alarm? Yeah, we do. Okay, so this is a valid area in the market because it also swept something here. It came back. Yeah, so this is a really nice zone. Eventually, when we grab all of this liquidity, and we come back here. So perhaps the swing low is still here, because this is the low that took out the high, and here we still haven't taken the high, so the low doesn't become strong low until the high is taken out. Similar on a EURUSD. And now I also want to look at Dixie, because we know that it mirrors EURUSD. Also already mitigated on Dixie, and we can see now he's going to reaction before we drop down. Okay, so on Dixie we know that, for example, down here we have a zone that is actually fully unmitigated. On lower time frames, perhaps we will see something here, but I'm going to check in a second. I can delete that. We had a break of structure, and then we also had this low, this high. We came back here. Yeah, okay, so we are anticipating essentially for the price to drop further down on Dixie. Therefore, on EURUSD, we're anticipating for the price to go further up. We do have space, obviously, for correction, but that's the same as on EURUSD. Doesn't look like the price wants to do it. As you can see, it's also an accumulation. Potentially could be all just now liquidity until price decides to do what it wants to do, etc., etc. And now let's have a look at it on daily. And on daily, so what I want actually, I want this to be visible on daily. Yeah. And on daily, what we can see that down here, we do have daily point of interest. See, so this could be first point of interest that we would be interested in. This would be liquidity. This here at a break of structure. Oh, so that's interesting, because from this low to this high, the price he mitigated the leg, but he never mitigated the point of interest. So now we are sitting at this one. But I think here we can anticipate a reaction, which is, I think, similar on EURUSD. These areas down here are completely unmitigated. So orders here are open, okay? And I think that's also the same on EURUSD. So here, reaction zones. So I would say now reaction zones. Reaction zones. And here we have orders open. On daily, you can see that we are taking those lows out. Yeah, this is clearly, we can see that it looks just like, this can be deleted. It looks like liquidity. This can be deleted. This, obviously, this would be now failed reaction for us. Although, is it that strong? Not really, because he hasn't taken any highs out. Maybe he did on lower time frames, but not on daily. I'm gonna delete stuff in between. Hold on. Then eventually, this is my old supply look. Okay. All of this, fine. Eventually, we took out those lows. So from the highest point to the lowest point. So we have nice area here. Again, the same is on EURUSD, but in the opposite direction. And we also have this, so we have nice overlap. Over here, we took it out. We are reacting. We are looking for the price to come back lower. So now, see, that gives us more confidence, because Dixie is clearer in some way that the price on Dixie should come lower. Therefore, on EURUSD will go higher. So that is giving us nice kind of confluences. Now on 4H, obviously, we can see that here that low hasn't been taken out. Here we mitigated back our 4H point of interest, so this can be deleted. This can be deleted. This can be deleted. This on 4H, yeah, that's a flip, because we did break structure to the upside, so it is a valid flip. And from 4H perspective, we have this. Now it's all the same overlap really that we keep on looking at, so we know that we may see some reactions there, I don't know, but overall we can see clearly now on 4H there, efficiency also hasn't been regained, so we've got similar scenario, but the last leg, 4H leg, internal, high, low, price came back into our premium like we planned. We also had here this area, but price just oh, this is supply. So price here is reacting, so now we're anticipating for the price to drop lower basically, and then 4H, yeah, so everything is in line. Obviously we have a slowdown, but that slowdown doesn't mean that the price will turn around, because remember how price likes to trap everybody who would be now saying, oh yeah, the price has to turn around now. It doesn't, you know, it could be just slowing down, because there are a lot of buying orders here. So then I'm going to give example of higher time frame. So over here we have a flip. If you take a look at the left on daily, so this demand took out a high, a supply, even though it was inefficient, doesn't matter, but you took it out. So you had enough buying orders. Then it came back into the premium of this leg, which is absolutely fine, and then started moving further down, and it didn't just slice through this demand. This demand was still holding, and we have a lot of interaction here. So that means that they had to put in a lot of selling orders to get rid of those buying orders, and then eventually price dropped. So what this accumulation could also mean is that we are trying to acquire a lot of buying orders now in order to take out these sellers. Okay, so this could be one of the reasons that what is happening. So, you know, everybody's anticipating that pullback, but actually it may not happen yet. We obviously cannot predict. That's why we just have to take into consideration 15 minutes lower time frames to help us understand what is going on, so we can make better decisions in the market. So that is it. That's our analysis. So I will catch you on Discord. Just remember that is big news today, but you know, this is our outlook. Let's wait and see. I'm seeing that recently London Open is quite messy and trappy. It's trying to trap a lot of traders, and then price kind of is clearer and more in the afternoon. But obviously we're not going to judge. We're going to wait and see if we have any opportunities. It's small ranges, so perhaps adapt to your risk reward ratio as well. Maybe you want to go more passively for lower or something like that, because we know that the price up until news is likely to respect daily high of yesterday and yesterday's low. So that is it. Thank you, and I'll catch you on Discord. Take care. Bye-bye.